Every decision you make with the financing is going to come with trade-offs, and there are hurdles that have to be hit. It may be the size of the property, maybe the debt service coverage, maybe the LTV, or maybe you don't qualify for this product because you're you and you don't have $200 million in assets just ready to deploy.
Hey everyone, and welcome to another episode of the Adventures of a Real Estate Investor. I'm Susie.
And I'm Michael, and we're excited you joined us for this adventure.
So today, I'm super excited because this individual I've been trying to get on a podcast for a very long time because he's one of the most fun people to talk to on the phone when I'm stressed out. And he's just an all-around really awesome guy. So thank you for joining us today, David Frasz.
Thanks for having me. Appreciate it.
Yeah, we're super excited.
Absolutely. Yeah, I finally met David in person for the first time in over 3 years, and we realized how long we've known each other. But have felt like we have met multiple times, but just met the other day in person for dinner in Columbus, Ohio. So that was fun. I'm glad we were able to make that happen. I think Susie's met him several times at some conferences and things like that, but I have not. Anyways, obviously, David, Susie and I know a lot about you since we've known you for several years now, but our Adventures family does not. Would you mind sharing with our Adventures family a little bit about your background and how you got into real estate?
Sure. So I got into real estate about 10 years ago, and I was previously working in finance and banking. I was living in Boston at the time, and I was kind of in these roles that felt like, to me, dead end roles, and I didn't really have the growth path that I was looking for to throw all my energy behind it and kind of make something of myself. So I started trying to reach out, and business school was always an option, but I wanted to do something else before business school. And I started interviewing and looking at investment consulting positions, and I had to do a case study on a couple of companies and investment companies. The position I was applying for was a real assets investment consultant position. Cool. And I chose two real estate companies, and I just kind of fell in love with the game and was blown away that a small company of 4 or 5 guys could be doing $100 million transactions and, just buying big buildings. And I was one of the companies that I was one of the 2 companies that I had to compare actually owned buildings that were right next to the building I worked in. And so it really kind of hit home. And from that point on, I started transitioning all of my networking into real estate and trying to figure out how I could get into the industry and what the different participants in the industry were, whether it's, general partners on the investment side or being on the brokerage side or lending or insurance or whatever. And just a couple of contacts in, I ended up hopping a job at my first company, State, which was a now competitor of mine. Yeah.
Awesome. That's really cool. So would you mind, obviously we know what you do. Would you want to explain exactly what you do now in the real estate game?
Yeah. So I started my background. My first job in real estate was as a screening analyst for a large commercial lender in the agency financing space. And I quickly grew out of that position and moved into underwriting. So multifamily transactions is basically the bread and butter, even though I did a little bit of other commercial assets on the screening side. And then from underwriter, I had to make a decision whether I was going to keep going down the path and try to become kind of a credit officer or chief underwriter or something like that and go down that path, whether I was going to leave and go onto the investment side and just work as an investment associate for a larger institution, or whether I wanted to get into sales. And so now I'm an originator, originating the loans that I've been underwriting for 10 years.
That's awesome. Yeah, David has been a mentor to me, a friend of ours for several years, as I mentioned. And when I was very, very green in the real estate investing space, he was introduced to me from one of our mentors and just kind of built a relationship from there. But it really helped me and Susie grow, understanding all, there's only so much you can learn from underwriting from a class or a course and things like that until you start getting into it and doing it yourself, right? But David helped kind of bridge that gap, right? Whereas there were some things I didn't fully understand about underwriting. David helped me clarify that, right? Hey, this is what kind of debt you can get on this property based on these debt service DSCR, right? And so like all these other limitations that certain debt has, certain debt, senior debt has, when you're looking at it either from agency or from a bank or from bridge loan, right? And so David really helped open my mind to the various different debt structures that were out there and like how to apply them, when was necessary to apply them to certain deals and which deals would support what, right? So David has been like instrumental in really helping my growth as underwriter and as Susie as well. So yeah, it's been, thank you, David. So I just wanted
Been a
to
ride. Yeah. Yeah, that's what it's all about. I mean, I think real estate finance is actually really, really complex once you start getting to the level that you guys are at. And it's one thing to buy a single family home and you have a couple of different options, whether it's conventional or FHA or private money or your uncle or whatever. And I think once you start getting into commercial real estate, first of all, people don't understand that just because you might be able to get 80% LTV on multifamily, it doesn't mean you can get that on retail, or just because you might be able to take your single family and increase the rent by using it as a single family or a short-term rental, that you can't necessarily capitalize that on the commercial side the same way, because everything has to comp out. And there's a lot of different aspects of underwriting that people just aren't aware of, that it really takes either years of experience or kind of getting in front of someone like myself who can kind of set you straight and at least get you started no matter what direction you're looking to go down on your underwriting.
Right. Absolutely. And like, especially, since we mostly invest in Oklahoma, like there's certain limitations and rules for certain, senior debt, whether that's agency or your CMBS or HUD, right? It's like, there's various different things you could go with. And like, we've been in this game for years. I wouldn't say we're green, but I feel like sometimes, like when I'm talking about a new debt service or something, right? It's like we're talking about Fannie Mae the other day, right? And just the various different intricacies of Fannie Mae loans and like what supplemental loans, what requirements you have to hit, what LTV, if it's limited by that, or DSCR and things like that. Just like there's so many, I feel like, in The Beautiful Mind, where he's, he's like,
Yeah.
he's looking at all the thing and all the equations and things like that. I feel like that's David.
Yeah, I do too.
He understands all of that. And I'm just like, I slowly, okay, now I understand this, this type of debt and this type of debt and this type of debt, right? Like I'm slowly learning all these things. And it's not really until you have that specific debt on a property that you understand it enough to be dangerous, right? As the operator. And, because we do a lot of Freddie Mac small balance loans, I feel like I understand the inner workings of that, because we do a lot of those transactions in Oklahoma. We won't get into all the details about that, but but it's always great to have. Yeah, sorry, good.
Yeah, no, I was going to say, I think one thing that a lot of investors don't realize, whether they're green or whether they're seasoned, is they hear about transactions getting done. They hear about this product or that product or the supplemental or whatever. And they say, oh yeah, that sounds good, I'll do that. But they don't understand necessarily that every decision you make with the financing is going to come with trade-offs. And there are hurdles that have to be hit. And it may be the size of the property, it may be the debt service coverage, maybe the LTV, or maybe you don't qualify for this product because you're you don't have $200 million in assets just ready to deploy. I've had clients come to me and they want a facility, which is, let's just say it's kind of like a line of credit or something like that. It operates very differently from a traditional senior mortgage. And I have to tell them, you're not going to get a facility. Same thing with certain products where they're really only eligible for larger loans. And if you're doing a $1.5 million loan, then it's just not going to be applicable for you. So I think that the importance from an underwriting perspective is to get the right information at the right time, which is before you get under contract thinking you're going to go close a loan with a particular loan product, or you're going to get a 2.5% floating rate loan when that's not possible for your particular transaction, that's just kind of what everyone wanted 2 years ago, was the Freddie floater, and everybody got all excited about it, thinking that they could put that on whatever property they wanted to put it on. And it really I think part of it is also recognizing that just because you're hearing on stage at some conference, some investor did some loan product that really benefited them, there are ins and outs that have to be navigated, and you have to do that with a professional.
Yeah, absolutely. Totally agree with that. And So for everybody out there listening, like how Susie and I's process work when we find an asset that we're interested in, we'll take a look at it. If it makes sense, we like it. The first step is we send it to a property manager. She says yes or no, right? If she says yes, okay, I do the full underwriting. And then I send the business plan, everything over to David. Hey, David, does this make sense, right? And then he's like, yes, and this is the debt you can get on it, stuff like that. If the property maintains at this certain level, blah, blah, right? With all these things that come back. And after that, then at that point, do I feel confident and comfortable submitting an LOI, right? It's like my property manager signed off on it. My debt guy signed off on it, right? So it's like, and then we're good to go. Like I'm never going to submit an LOI thinking that I'm going to be able to figure out debt later on, right? I always have at least one plan in place before we move forward.
I was just going to add too, like even with David, well, it goes with kind of what you were saying before, but there are so many people who can provide debt. And, it's like the people who are super active on social media and they like kind of just say super nice things to you. And they're like, oh yeah, we can get this done, and they go through this line of what Michael was just mentioning, right? And they don't send it beforehand because they're like, oh, I have this great relationship with this individual that does super cool things on social media. And then, then they engage afterwards, after the PSA is completed and everything. And then they find out that their debt that they're getting could be horrible and totally ruin the deal, right? Like what I actually really love about you, David, too, is that like your creativity and your ability to be like, so I know you said that you think you kind of want that. And I'm going to tell you again why you shouldn't do that. Like it's just very honest and transparent, which makes a huge difference, right? Because when you go in thinking you could get, 70 or 75% LTV, and then it comes down and you're only getting 50, it's like, no, that totally kills a deal. And this is why you need to have these relationships beforehand, and even to feel comfortable to reach out with the individual beforehand, like that they're not too busy for you. Like even when you've had, you've worked with them every opportunity that has been given to you, right? Like depending on the amount of deals, like you really create a relationship.
Mm-hmm. Yeah. And I think that's really important because it goes both ways, because at the end of the day, it's about trust from both of us. Because I'll tell you, I've lost deals because I told borrowers what they didn't want to hear too early in the process, and they thought that I wasn't going to be able to get it done. And it didn't have anything to do with me. What I was telling them is that you're not going to get it done. This does not how it works, but they didn't want to hear that. And I didn't have that trust level with them yet where they accept it as guidance and not me just saying, go, I can't do it for you. So it really goes both ways. And so you guys know that when I tell you something that kills your deal or changes your path on a deal, it's not because I don't want you to do the deal or be successful in the deal, or that I can't get it done for you. And I'll tell you if I can't, but usually it's because there's something about the deal that makes it not a good fit for whatever product we were talking about. And I think I've also had situations where I talk to someone on the phone and they say, oh yeah, it's this 40 unit property. It's this, that, and the other thing. It's in this market. Okay, great. Yeah, it's really nice. It's built only 10 years ago. And then they say, yeah, I'm going to get it under contract and then I'll send it to you. And they get it under contract and they send it, and it's got a HAP contract on it. It's got a LURA, it's student housing, it's whatever. And all of a sudden that 80 LTV goes to 65 or, whatever the product changes. And now they're kind of scrambling to figure out what they need to say to the broker to kind of retract their offer or change it or whatever. And a lot of times those deals end up falling apart just because the sponsor's gone in a little bit over their heels or over their skis and not really moving in the order that you should. And I think getting a professional on your side is the first step, whether it's accounting, legal, financing, whatever it is. You need to at least get the lay of the land before you start making offers on multi-million-dollar properties.
Absolutely. Totally agree. And then I want to make a caveat to what I said earlier too, is like when I say, I sent everything to David, he says like, this is what we can get on the deal. I'm not just sending him every single deal that I come across, right?
Yes.
It's not, I'm only sending David deals that I know that we have a high chance, like 80% chance plus of actually wrapping this deal up, right? And then him giving me the green light saying, okay, this is what we can get it at, allows me to then adjust the underwriting to maybe push out these other people that are offering on the property as well. And it just makes me more aggressive because I know, hey, David says we're here and I know he's going to close here. As long as the property maintains where it's at, we're going to close here, if not even better by the time we get to closing, right? Because David always delivers. And I just know that. And it's just the confidence it gives me going into writing an LOI. So I'm not sending him like, oh yeah, here's a property, here's a property, here's a property. And then we close 1 out of 20. I'm not going to waste David's time because it takes a lot of time and effort to underwrite these properties on David's side of things.
It does. And I think that's another misconception on the sponsor side, depending on what one's background is. Because if your background is in investing in single family homes, oftentimes I think you can get quotes on those much, much more quickly. You say, whatever, this is the rent that the tenant's paying and this is how much I'm buying it for. And, here's 2 pieces of information. Can you give me a quote? And it's really different with commercial real estate, particularly agency finance. If you're just going to try to fit a $5 million deal into a CMBS bucket, usually there's a way to get that done. But with agency kind of premium multifamily financing, it is a specific guide of underwriting. So it's important to do that. And I think a lot of people go into it thinking that, I have people just send me an MLS listing and say, well, how can you help? And I don't really know much about it. I just have the address, and it's really hard to give anyone reasonable feedback that they can rely on with just that information. So I think the other lesson here is that the quote you're going to get is only as good as the information you provide. And sometimes it's you're not providing information. Sometimes it's the broker not providing information, or the seller doesn't want to give stuff up. We have to work with what we have. But the reality is, if you send a lender a rent roll that's 3 months old and a P&L that's from November of 2022, you're not going to get that quote pinpointed the way you might like. And it might look better up front and then, come in the opposite direction in underwriting, or it might look crappy up front and maybe it could be better once you get into the underwriting of the updated documentation. So it's just if you're going to be making these decisions, especially where there's so much competition on every deal and the numbers are so tight, you really need to be dialed in, especially if you're going to try to squeeze out certain returns for your investors. It really pays to be using the most accurate information and disclosing everything that you know and really digging in. It's not kind of just throwing stuff at the wall and hoping it sticks kind of business. A lot of people think that that's how it works on the quote process. But I mean, when I send you a quote that's ready for you to rely on, it's taken me 4 or 5 hours to get there. And I've probably gone back to you with a list of questions, and we've done market analysis. I've reached out to appraisers in the market. I have a pretty high degree of confidence. I know exactly where that transaction is going to underwrite at the end of the day, as long as the information I have is accurate.
I'm trying to word this well, but like the amount of effort that you put in, like people can see through you, whether you want to like accept that or not, not you on your end, David, like us as operators. Like a broker can tell when you put in, like you've put in a lot of effort. A lender can tell when you put in a lot of effort, a property manager. I mean, even just other partners in general, because like somebody who's put in the effort to like educate themselves and like they're really in this for the long run would also never just send someone a listing and say, what can you size this for me?
Right.
Although you might say that you've done X, Y, and Z, like that your actions speak way louder than your words. And I mean, even just going off to what David said a little bit earlier about you might have to go back to the broker, and retract your LOI. Like that ripple of you not educating yourself from the very beginning has an effect. Like it doesn't, you have affected the broker, you have affected that seller. If they've already looked at your LOI, like if they ever have another property in the area that you want to submit something on, they probably aren't going to look at it knowing you retracted one before. Like, yes, you could get like a second chance somewhere in the universe, but you never know if you actually get to. So,
right.
Oh, huge.
Yeah.
And I mean, even for experienced operators too, though, actually, like, because it is a relationship and because it does require a lot of trust, like you do have to remember that throughout the entire, lifespan of the deal. And if like your lender can't get you something that you want, like it speaks more about the deal than it does about, who is sizing that property for you.
That's where I think the relationship is really important to build, because again, this isn't a single family home where you're looking for the best rate and that's all that really matters. And you're going to close the deal and never do another deal. Your reputation with brokers matters. Your reputation with lenders matters. There's variation in how everyone manages their business and how deeply they get into deals. But the commitment that I make to my clients is I never just take 5 or 6 numbers that you might tell me over the phone and draw up a quote for you and say, here's the quote. If I do that, it's going to come with 3 paragraphs of qualifying concerns or considerations to think about, or a list of things that I don't have access to, and so I can't incorporate those into the quote. So it's basically going to be stipulated that this quote is worthless until you get me anything that I need. And some people don't like that. Some people just want the quick quote that they then put into their LOI, send it in, and deal with it later. But that's not the commitment that I make to my clients. And so again, it takes a lot of time to get through one of these deals. And I'll tell you, I've had situations where a client sends me a deal, or a prospective client sends me a deal, and I spend 4 hours on it and get back to them a day and a half later or whatever, and they don't respond. And then I follow up the next day or the next day, and they say, oh yeah, we passed on that deal, the numbers didn't look good. And so they passed on the deal before I even got them a quote. And so in that sense, it's kind of like, again, you got to be careful, because the next time you go to get a quote from someone, you want them to give you the detailed analysis that you want on your deal, because otherwise it could bite you. And so I think it really goes both ways. Is if we're going to do this, then you do your diligence, I'll do mine, and we'll be partners on this deal together.
Absolutely. Yeah. And just speaking to that some more, is just when I send over stuff to David, it's like, I feel like I write quite a bit of information. I know exactly what the business plan is, right? I know how long it's going to take to execute it, what our exit plan is, right? That's very important to know. If you don't know, you're just like, okay, I'm either thinking about this exit or this exit, right? And then kind of where you're going to come in with equity, other things like that, how you're going to structure, if you're structure PE in there, private equity. So like various different things. And every time I write an email to David, I feel like it's like paragraphs and paragraphs. And because we know each other pretty well, and like I know exactly what questions he's going to ask, but there's still questions that he comes back with. There's like, like 10 or 15 questions. I'm like, man, I wish I thought about that. But I provide all that information. And he's not just like David said, it's like he's doing deep dive analysis of the property, right? In order to make sure that the quote he gives is actually going to close at that if the property maintains at the current state, right? So it's like, and that's why I know. That's why I love working with David, because it's like, I know once he gives me that quote, keep the property there, we're going to close and it's good to go. It's not going to be, a week before closing, it's already going to cut loan proceeds about $500K. Crap. And now we have to raise $500K, right? It's like all these other issues, right? That ripple effect that occurs, right? So it's always very, very beneficial to have a lender in your corner who is reliable and is going to not only provide you a solid quote, but also be able to close on that.
Yeah. Well. If you don't have a David, you need a David.
Yeah. Yes, David is awesome.
I mean, it's just cool too, because like you are a very creative human, and so like even with the questions that you come back with, like sometimes Michael and I are really like, wow, like we wouldn't have ever thought of that. And so it's been really beneficial to start to see underwriting completely differently.
Right. Because those questions you come back with too, like help us think about different ways of looking at a deal too, right? Yeah. It's like, oh, I thought we analyzed this deal 18 different ways, right? And then you come back and you're like, help us with the whole due diligence process, if you will, right? It's like, oh, these are all the other things we need to analyze too. So
Yeah. And that's one thing that often I end up sort of helping clients with, is whether they realize it or not, is helping them figure out what they need to ask the seller for. And oftentimes they'll go back and they'll be like, oh yeah, like you're right. I didn't get the information on the tax abatement. And it turns out the abatement only goes for another 12 months. And, that's an important consideration if you're buying a property and you think the taxes are going to be $3,000 a year, but that only goes for 12 more months, and then they're going to go up to 60. So, that sort of thing, where I try to be much more of a mentor, not just in the specific deal process, but along the way, as you're looking at deals, as you're growing your business and expanding, because I do look at this as it's a long-term kind of relationship that we're building together, where I don't have to worry about if I tell you something you don't like, you're just going to leave and go do business with someone else. And so I can be honest and also give you guidance that's real, rather than hiding all of the useful nuggets that are going to keep you guys successful and kind of help you grow your business along the way. So that's the important stuff, because the more you grow and the bigger deals you do and the more deals you do and the longer we're doing this together, the better it's going to be for all of us. So it's important for me when I'm working with clients to educate them as much as I'm kind of helping them get one particular loan.
100%.
What was your useful nugget the other night at dinner about the convenience fee package? That nugget, because I was like, now I want a nugget. Like when we were talking about the convenience fee package, how Freddie or Fannie could be like, no, we're not going to use that as additional income if it doesn't look like this. Like, because remember how like it can include water or
rental insurance, things like that.
Yeah, with the agencies, I don't remember exactly the conversation, but with the agencies, it's important to think about your other income sources and how they're recorded not only on the P&L, but how they're noted in the leases. And I say that I think the example I gave was an example of a deal I closed recently where the property was a nice property in kind of a more downtown market. So they had kind of upward pricing pressure for the market, but also the property. But the owners had renovated, and they were providing essentially kind of an all bills paid type of type of rental for their tenants. And so not only were the units actually all bills paid, water, electric, whatever, but they also had cable paid for. They also had open free parking behind the building. They also had washers and dryers. So there were all these things where in another property, you might see this stuff being paid by the tenant, or, there's a laundry room that's generating laundry income or whatever. So they weren't really collecting laundry income. It was just in the form of higher rents. Well, the rents, because of all of the, not just one, but all of the many added items that the tenants were benefiting from at this property, the rents were actually technically above market. And the fact that the rents were above market meant that Freddie Mac wanted to cut the rents down to market. And they weren't giving credit for the laundry and the parking and all these other things that nobody disputes have value, but the value wasn't quantified. And so the conversation was in the lease to break out, $100 of your rent is going towards your cable, and $50 of your rent is going towards your parking, and $50 of your rent is for the use of the washer and dryer. And you do it that way now, and then on the P&L, you record $50 for parking, $50 for laundry, and $100 for your cable. And now we can count those other income sources. So instead of cutting the rent from, let's just say $2,500 to $2,000, now the rental income on the P&L is actually showing $2,000 a month per unit. But now we've got a parking item, a laundry item, cable income item. And so now we're able to count that. So all of that delta, that additional other income, which they were collecting in the form of rent, but now they're reclassing it as other income. Now we can count that. So it's very different, where we just, the argument that I made over and over to Freddie was that, look, there's all this value being captured, but they said, well, we can't quantify it. It's not in the leases. So that's the lesson. So what that client is doing now, as they're preparing for a refinance in the next 12 to 24 months, is redoing how they pull all that together in the lease and on the P&L, so that next time around they don't lose some of their income.
Gotcha. So Freddie would count that if it was broken out, they would count the rent at 100, they would count 100% of the rent, and they'd also account for all the additional income, the other income, right?
Right. The net amount from the tenant is the same. It basically is just how the lease lays out which bucket it goes into.
See, these are things that
the little nuggets.
Things that people don't think about, right? And they're just like, oh, well, you pay your rent and you get all this stuff for free. Well, great, but that doesn't help for lending. So
right. And the other piece to that was kind of hidden in there, the other nugget for you, is that there's a difference between your underwriting and the way a lender is going to underwrite. And I think everybody sort of knows that, but they don't know what that really means. So if you're going to go in and you're going to charge $2,500 a month to your tenants because you're offering all this stuff and you can do it, and maybe you had a test property and they were able to do it, or the guy down the street did it, that's great. But if $2,500 is technically above market and your property is the only property that comps that out, then the appraiser is not going to be able to conclude to that. And obviously that's what the lender is going to underwrite to, is the rents that are market in the appraisal. And so, yes, you're going to collect the same amount of income, but the reality is, can you get a loan that's based on that amount of collected income? So there are two ways you need to really think about the deal when you're underwriting it. Is, how am I going to underwrite it? How can I underwrite it so I can get the NOI that I'm projecting? But also, is the lender going to underwrite this any differently? And if so, how? So I can either figure out a way around those requirements, sidestep them, or take them into account and say, look, I know I'm going to be collecting above market rents. I know I can do it. I need to get comfortable with accepting a lower loan amount because the lender's not going to be able to support that cash flow.
Yeah. Absolutely. And so speaking of that too, is like, I don't know, it's a crazy story because Susie just got done, I think, approved today, or we started implementing what we're going to start implementing an amenity package at our properties. And so basically the amenity package is like, it's a flat rate to the resident, right? They just say, let's say for purposes of this conversation, it's $100, right? And, so they have their rent, then they have the amenity package, which is $100. But Susie, we broke it down even further, 50 of that goes to water, 20 of that goes to electric, 10 goes to pest control every single month. Renter's insurance, another 15, right? So it's like, and we broke every one of those things down, and then we'll have that all listed out as additional income on our P&L, and not just one lumped amenity package, right? So it's like, so we can get credit for all those additional income sources on the property. Mm-hmm. So. Yeah.
Makes a big difference.
Yeah. And that another reason that's important is because different properties that an appraiser will comp out are going to have, some may have pest control billed back to tenants, but they might not have they might not have a gym that they're allocating $10 to, or they might bill back water, but not pest control or whatever. And so, but then there might be others that do bill back pest control. And so it's helpful to provide that, because if the appraiser goes and sees just amenity fee income for $100, they may say, I'm looking at bill backs on all of these comps and they're only getting $50 per month per tenant. Mm-hmm. But one property, it's $50 for cable. The other property, it's $50 for pest control. The other, it's $50 for laundry or whatever. And you're giving them all of those things and collecting $100 for all of those things. So all of a sudden that becomes supportable, because they can actually see it broken out and say, yes, $15 for insurance, for renter's insurance, is bearable by the market, or $10 for pest control is bearable by the market. So all these things all of a sudden are able to be comped out, which gives the lender a more clear path to underwriting all that income. So
love it.
I do too.
Cool. Well, obviously we could sit here and talk about all these amazing things and pick your brain on different lending strategies and stuff like that. And I would love to do that. I do enjoy doing that with you, David. But it does bring us towards the end of the show. So we're going to transition now into the Adventurous Four. These are 4 exploratory questions we ask all of our guests. So if you're ready, David, we'll begin the questioning.
Sure. Go ahead.
Okay.
All right, David. So the first question we have for you is, where is one place you wish to travel to and why?
Yeah. So this one's tough because I actually haven't traveled a lot in the recent years, honestly. But I think, and it's hard to break down into one place. My sister and my mom had a really great time in Southeast Asia, and they said it was amazing. And all of the stories that they have make it seem like a place that I'd really like to go and experience. I'm also kind of a big Scandinavian Viking history kind of guy. So I think the Scandinavian countries would be a great cultural experience as well. And I've recently kind of gotten turned on to Dubai. I have a client actually who is out in Dubai, and he was here, but he recently moved back, and he's over many conversations with him. It seems like just a great place to experience and kind of maybe get off my feet a little bit and then enjoy some weather and some beauty. So yeah, I can't really break down into one place, but those are probably places that and one more, I guess Croatia is one that's kind of
I was waiting. I was waiting.
There's only one right answer, David.
yeah.
That's
Awesome.
cool. That's a cool answer. I appreciate that. So speaking of Viking stuff, like if you're listening to this podcast on the audio version, please go to the YouTube channel and watch the actual video and check out David's beard. It's actually a work of art, and he's been growing it for now. So yeah, there you go.
I like this.
Oh, wow.
Wow.
Almost to his
You can
right.
see my beard, but not my face.
Yeah.
I like that.
This makes me laugh, actually. You should put googly eyes in there. That makes me happy.
Awesome. So good.
Second thing, or second question. What is something on your bucket list and how are you leveraging real estate to achieve it?
Yeah, so bucket list is interesting. I don't really, I have like for years I've been running kind of a like to-do list that is like more personal and things that I'd like to do, and whether it's picking up another language or another instrument or something like that. So bucket list is really tough, but I think the biggest thing for me and the way I'm leveraging real estate to achieve it is really financial freedom and time freedom. Really, that's kind of what it all comes down to. So retire early is, one of the things that financial freedom would enable, but I'm still I'm still in grind mode, but I think it's for me, ultimately, it's getting to a point where I don't have to work for $1. I don't have to do anything at any particular point in time. If I want to spend time with my family, I can. If I want to buy something for myself or take care of people I love, I can do that and not have to worry about how it's going to adversely impact me financially and make trade-offs in the rest of my life, whether it be with my time or with my other assets. So real estate is just integral to that entire theme of trying to create streams of income that kind of feed the beast and pay for my lifestyle and the life I want to create for my family.
Totally.
Absolutely.
I love it.
Love it. Yeah. So David didn't mention this, but he is also an investor. So he does invest in some of the deals he provides senior debt on. So yeah, that's cool. So the third question we have for you, David, is what is one piece of advice for someone who wants to start investing in real estate since you are an investor?
Yeah, this one is interesting. And I actually get this question a lot at conferences when I'm talking to people, that the conversation starts off very professional as I'm a lender. And then it kind of, goes oftentimes I'm speaking with GPs and what they're really interested in is raising equity. And the debt piece is a little boring to them, I think. And so they want to know if I ever invest myself. And of course I do. I think the advice I would give it's really twofold. Number one would be focus on the character of the people you're investing with, and not the other limited partners, but the general partners, the people who are leading the investment. And I guess if it's not real estate, you would maybe be your financial advisor or something, but you really want to be aligned, whether it's long-term, short-term investment, whether it's fee structures, whether it's kind of work ethic. I mean, those are really the important things. And for me, when I look to invest with a general partner and kind of sign on to be part of their syndication, I'm looking for someone who they have to be smart. Obviously, that's important. They have to have a good command of the business and understand the numbers, but being conservative and prudent is also important. I don't want to invest with a cowboy, I don't want to invest with someone who's just kind of running around throwing money at deals, and 1 out of every 5 deals is going to go sour. And really being a student of the game and being hardworking is critical for me, because this is a messy business. And if you're a general partner, you're going to have insurance claims, you're going to have hailstorms and tornadoes, and you're going to have tenants that call the police, you're going to have tenants that shoot each other. I mean, there's a lot that can happen at properties, especially when you get into dealing with 100, 200 unit properties in working class areas where crime happens and things happen. And investors out there that are setting up deals, kind of working behind a computer and don't really dig in. And when times get tough, it's really difficult for them to save their deals. So that's number one. Number two would be, so I think being able to kind of weather that storm and roll up your sleeves and really get to work is important. And there are a lot of, keep your ears open, your eyes open to where industry professionals are investing and who they're investing with. I think one of the things I see often is limited partners just following the herd of limited partner sheep. And I don't mean that in a disparaging way, but I mean, everyone hears about who someone they know has invested with, and, now they're getting their $200 a month distribution and they're excited about it and they want to put money to work. And so they get to know that general partner and invest in their deal. But it really takes more than that. And I think if you look at people like myself, people like insurance agents, insurance brokers, listing brokers, most of us are putting our money somewhere. And if you find out where, you'll at least get a little bit more insight as to who those sponsors are that you might want to hitch your wagon to. And I think, it doesn't necessarily have to be professionals, but it could be highly experienced limited partner or someone who used to be a general partner and now they're just kind of passively investing with different syndicators, that sort of thing. So don't take somebody who doesn't know anything about real estate and throw your money where they're throwing their money. Find people who really know what to do with their money and follow what they're doing with it.
Love that.
Yeah, that's great advice.
Mhm,
Because so many
100%.
people don't do that.
Yeah, 100%. Everybody kept asking us, why are you investing in Tulsa? Guess what?
Yeah.
All those people that were saying that 2-3 years ago, guess where they're
Yep.
investing?
Yeah. I mean, exactly. I mean, 2-3 years ago when Tulsa was a $50,000 a unit market, everyone it was kind of like, why?
Yeah.
And now there's so much going for it.
Makes me happy inside.
It's great. I mean, I don't like more operators to, water down the LOIs and stuff like that, or to increase the LOI prices and stuff like that. But, it's all ultimately greater for the market in general, right? So rising tide raises all boats. So
Yep.
Yes.
Yeah.
Cool. So then our fourth and final question is, if you had unlimited resources available to you, how would you leave an impact?
Unlimited. Well, unlimited would lead me to make multiple levels of impact. But one thing that I think is huge, particularly, and there's no easy way to solve these problems, of course, but poverty and food insecurity is, I think, something that's really important. And I feel like, particularly in America, where we have so much wealth broadly, whether it be the national GDP or average income or whatever, however you look at it, there's a lot of wealth in America, but there are a lot of people that don't have any of it. And the fact that someone who is, working hard and trying to make ends meet can't adequately feed themselves and their children is I think problematic. And so that would probably be the biggest one that I would kind of jump on if I could.
Yeah, I do too. It's always I love when I see that someone somewhere, right, has gone to a school and paid off the debts for the kids who negative and can't eat anymore. I'm like, oh yay, because that is heartbreaking.
Yeah.
Yeah, and I think that's just before we could easily get down this rabbit hole, but I feel like they've tried to solve that with school lunch programming and things like that, and they've found that things like that really make a difference. But then you see we go through a period of COVID where nobody's in school, and you have kids that are not only falling behind because they're not getting the instruction that they need, or they don't have the technology to get the instruction that they need, but now they're falling behind because they can't think. I don't know about you, but when I haven't eaten since yesterday lunch, I don't function very well.
Yeah.
And I think, that's one thing that I think is really kind of to level the playing field too for the next generation is you solve food insecurity and you let all of these kids develop their brains with adequate nutrition. So yeah, I think that's a big one.
Me too.
For me.
Totally, 100%. Well, David, it's been an absolute pleasure chatting with you. Before we end the show, would you mind sharing with our listeners where they can find out how to get a hold of the best lender in the business?
Yeah, thank you. Yeah, a couple of different ways. I don't know if you're going to share my contact information, but email is great if you have a deal or you have documentation that you want to send over, or you have questions you want to lay out for me, or even just kind of set up a dedicated time to meet. You can obviously also give me a call. Cold calls are fine. I take a lot of those, but yeah. And then if you want to get in touch with me or sync up on social media, you can find my LinkedIn and my Instagram. I'm not great with social media, but I am there. So if you want to connect that way, I can get back to you there. And in any case, I would just say I'm here to be a resource for anybody and try to build a long-term relationship where I can guide you and help you be successful, or add something to your quiver of arrows to help you be more successful. So always open to a conversation and kind of broadening the network and seeing who we might know that the other person knows.
Absolutely.
Yeah, I was gonna say, and I'll make sure to add all of that to the show notes, so you won't have to worry about any of it. But I feel like there's a clear divide between people who like being cold called and people who don't. So take David seriously because he likes it, and don't ever cold call me because I won't answer.
It's really interesting, actually. As my brand has grown a little bit and as I've kind of built a reputation in the industry, I get cold called more than I cold call, actually, which is great. And I know it does give people anxiety to pick up the phone and call. And sometimes I get cold calls and then I call back if I've missed it and I never get in touch with the person. I know that phone phobia is a real thing. I used to have it before I had to force myself to start picking up the phone and making calls. I know my mom has phone phobia, but it's a very common thing. But honestly, I try to be open to talking with anybody. So if I pick up the phone, I'm willing to talk.
I appreciate that, David. And if you're looking for him on LinkedIn, the last name is spelled, it's Frasz, F-R-A-S-Z. So, and if you reach out to him on LinkedIn, please tell him you heard his interview on the Adventures of Real Estate Investor podcast, and he'll definitely accept your connection. 100%
Absolutely.
guaranteed.
Yeah.
I like
Friends of my friends are good.
Yeah, I love it. Well, thank you, David, so much for joining us today. I'm glad that we got you.
Yeah, finally. I know. Thank you for your patience.
No, thank you for yours. I appreciate
very,
it.
very busy, man. So I appreciate it, the time and the information you shared. So
thanks. Yeah, of course.
Always a pleasure. Thank you so much.
All right. Talk to you later.
Yeah. Until next time, explore more adventure ways.